Hello and welcome back to Tax. My name is Roland Elias and today we are talking about avoiding double taxation with German's taxi treaties. And I want to talk with you about the things you have to know and how to avoid the double taxation. First of all, we're have been talking about the so-called double taxation agreements, so-called DTAs. Germany has so-called DTAs with every country around the world. Over 90 countries, they say, okay, you can tax this, you can tax this, you can tax this. There are some countries where there are no double taxation agreements, but at this point, the most of them are the lands where you say, there's industrial, there's tech or something. With all of these countries, there mostly are so-called DTAs. In Germany, we say Doppelbesteuerungsabkommen. These DTAs are the big questions. What are they for and why do we have to use them? The first thing is, what is double taxation and why it matters? Because if there would not be a double taxation agreement, there might be a situation where you have the bad situation where one income may be taxed double. So you pay double the tax on the income you have. For example, like salaries, dividends, or something like this, where you, for example, live in one country, but you have your deposit or your employer or something else in another country. So the double taxation happens when two countries tax the same income. Normally salary, dividends, rents, something like this. This is a common concern for expats, for example, who have foreign employments or assets. Because this says, okay, I'm in this country, but how do I have to tax it? And it also affects income from work, investments, pensions, and real estate. So these are the most common positions or businesses you run in another country. Without these treaties you have at the DTAs, you might have to force double tax burdens and reduce net income. That means, for example, we have someone who's living in Britain or his work place is in Britain, but he moved to Germany. So his employer is in Britain and he's living in Germany. And then you have the tax rules in Britain. They say, oh, there we have a salary, but it doesn't matter where it goes. There we have to pay taxes on it. So the employer in Britain says, okay, you have to tax this. And then the German government says, hey, there's an employee who's living here. Oh, yeah, we have to tax this too. And so you have the so-called double taxation. DTAs aim to allocate taxing rights to one or the other country. This is determined on what the income source is. The so-called DTAs work relatively easy. DTAs define which country has the primary right to tax certain income types. For example, they often apply the residency principle, means if you're living in Germany, then they say, okay, Germany, you have the right to tax this income. Typically, in the concern of Germany, they also always get the foreign tax credit, means they say Germany has to tax it, and the other ones say, hey, he's not living here, so we are out. And this is the most situation for this double income, double tax thing. For this, it's also a big thing because there are some so-called tiebreaker rules, where it says, okay, if you have something like dual residency or something else, then they have the big problem that they say, okay, he's living there. So there are some special things you have to know about. But then in most cases, you have the one life point where you say, okay, I live in Germany and this is the easy way. For example, there is a DTA with every country around the world, around about 90. And these might be a little bit close to another, but some of them are rarely different. So for example, I just want to go through 5 points where we have income types which are covered by a DTA. For example, we have the so-called employment income. This is the classic income. You have your employer and you're an employee and you get money from foreign employer. This is taxed where work is performed, with exceptions. For example, your employer is British or a USA employer, and you work here in Germany, so it's like normally where the work is performed if you're in Germany. Dividends, interests, royalties or something like this usually are taxed at the source, means in the USA or in Britain, but there are some specialties like so-called Quellensteuer, where they say, okay, we will get 50% in USA and the rest of it will be taxed abroad. Then pensions, for example, they may be taxed at home in the country where you get the pension from, but there are some cases where it says, okay, everything you earn will be taxed in the country you live. Rental income typically is taxed where the property is laying. That means if you have property in Germany, then you have to be taxed in Germany. If you have a property abroad, then it will be abroad. Self-employment, there are some differences between the DTAs. Normally, it's there where the activity takes place, but it's not if you're a German business owner and say, okay, I'm working about 3 days a week, something like this, in Austria or in Swiss, then you don't have to pay taxes in Swiss because your business is stated in Germany. The common countries with high DTA relevance are, for example, United States. They have especially complex rules for US citizens. Worldwide taxation still applies. India, it's the most important thing for tech workers in Germany, where the DTA is active. United Kingdom, clear DTA and most favored for Germany. Canada, treaty is very special, but has some exemptions for pensions and investments. And Australia is moving up in the case of Germany. This is for employment, remote work or something like this. There we have clear rules. But how to get your tax relief under a DTA? It's with the so-called Anlage aus, AUS, but that has nothing to do with the USA. It's a form you have to fill out, and there you have to declare your foreign income, and then you can say, okay, to provide proof of taxes and paid abroad, you get a paper from the IRS or from another office abroad, tax office abroad, and then you say, okay, I pay taxes on this, but here's the difference for the German taxes. You can apply for foreign tax credits, like to reduce the German tax. It might be possible in some cases. And in some income has to be, totally be taxed in Germany. Also, it has been paid from abroad. So in these cases, it's a little bit difficult to give a pointy statement, because in the most cases you have the big problem that you have over 90 different DTAs, where you can say, okay, some of them are working very good, some of them are working bad, some of them are so-called low tax states, where it's called Steueroasen or something like this. There are some specialties, but mostly you have the official OECD DTA, where you can say most states and most countries get on this standard paper and don't have so much differences. So do you have any other questions for taxation in Germany or something like this? Then keep it up in the comments below.